All right. Good morning, everyone. Let's keep going. Okay. Friday session, we finally saw a real sell-off in U.S. equity markets for the first time in a while. 1.5% on the Nasdaq, over 1% on the S&P, and it actually got better in the last 2 hours of the session. I mean, we were really looking like we were going to blow out at one point before the close in the U.S. markets. We had a couple things that I think leading the charge. In my mind, mainly the number one thing is the Greek debt situation. Essentially, they're running out of cash this week. If they don't come to an agreement this week, most likely they're gonna end up exiting the eurozone. I think that they're also gonna it's gonna add excuse me. I think also the what's adding fuel to the fire there is you've seen what's going on with bond yields. They're starting to tell you that they're most likely going to exit the eurozone. We've got then on Friday we also had, in the middle of the session, we had the Chinese government, which came out and said that they were going to expand the short selling provisions in China, add an extra 150 shares or something along those lines to the short selling basket, and also take away some of the margin lending to certain people that fit different criteria. So between that, I think it was it was definitely a negative on Friday, really adding a real negative bias. When we had that news come out of China, we had the Chinese equity market or Chinese futures market, that dropped as much as 6% intraday. You can see that we had a big reversal after, on the weekend, we had a reserve rate cut out of China. So we'll get into that in a second when we look at the Asian stuff. We also had, we talked about the rig count finally started to affect production last week. So we had a big bump up last week, actually, overall week on week in the oil price. And, so those are kind of the major themes, I think, going on in the market at the moment. So last I saw, so now Chinese equity market has gone back into negative territory. Like I said, we were down 6% before that, going into the weekend on the futures market there. Coming out of that, you can see that we ended up running into positive territory this morning in the Shanghai, only to reverse into negative territory to finish the day. Hang Seng also trading down over 2% at the moment. Australia actually was pretty soft over the weekend. Despite the reserve rate cut and despite what that probably will do, at least initially to the commodities, it wasn't able to really get Australia's stock market going either. So we're talking about a little bit more about the reserve rate requirements in China. Essentially all that is the banks are required to hold a certain amount of capital on their books relative to the loans that they give out. They cut that by 100 basis points on the weekend, and that's obviously what got markets going. They look at that as a form of stimulus. From what I take out of that more than anything, because it doesn't do the same thing as an interest rate cut. Essentially, there's a big fear at the moment in China, and there's a real tightness in the lending system, but especially the interbank and that sort of thing, because of the fact that people are so worried that that about the loans that they've got on their books, about hidden provisions and things like that. So the big issue there is that they're trying to loosen liquidity interbank. I don't think it's so that they can actually free up a whole lot of new loans. So obviously the market took it bullishly, but I don't think that it's. I actually think it almost points to kind of a negative scenario that's happening there at the moment. So I think it's something to be wary of. Watch closely this morning. I have a slightly negative bias this morning personally, relative to everything that's going on. I mean, if you take the Chinese cut out, reserve ratio cut out, then I think that there's nothing really positive to have a look at, and I think you've got to be careful about the market potentially filling a bit of a gap this morning. All right, looking at a chart of interest for the day, we're going to look at, we talked about what the bond market's been doing there. Recently, we've got the Euribor that's now dipping below 0%. We've got the German 10-year right now that's trading at 0.069 of a percent. So, I mean, you're getting 6 basis points on a 10-year paper out of Germany. The spread right now has really started to fall in, and you're starting to get to the point where the banking can deduct interest from the principal owed by the client. I mean, it's just not a place where I think is long-term sustainable. And for me, I mean, I know that I've had a bit of a negative bias toward markets for a while now, but there's just something that's undeniable about the fact of what's going on right now. And when you look at that, and you look at depositors, they're going to actually have to pay to deposit their money. It's just, I think it's something that's going to be unsustainable. You can say that the money's going to run into the stock market, but at a point, it's a bad scenario. I think that's starting to unfold here. I don't think it can last for all that long, and it's going to become very, very interesting in my mind. At some point this year, there's going to be some real effects because of what's going on here. All right. Look at Morgan Stanley coming out today in the States. There's a ton of earnings coming out in the States. We'll just throw that out. It's kind of the last of the financials. Every other one has beaten up to this point. We have the Japanese tertiary industry index, which actually came out slightly better than expected. We have German PPI just a while ago, and then we've got Chicago Fed later. So not a whole hell of a lot going on today in terms of market data. So let's get into the maps. All right. First thing that we want to look at here is the German DAX. So I want to actually back up a little bit here and just show you guys the scope and scale of what's going on here. And it's funny because you get so many people saying, I know you got to put your money into Europe now. It's like you're really starting to get a flood of that type of information. Somewhere in there, that's obviously where we broke out. I mean, just to put this into context, we were at 8,350 in October. It's not even the beginning. It's the middle of October. 8,350 we traded down to on the DAX. 5 sessions ago, we were trading at 12,400. I mean, we literally rallied 50% since October. So to say this thing is overbought is an understatement. I mean, we're talking about one of the more major economies on the globe. I mean, I think, I could be totally wrong when I say this. I don't know that that's happened more than once or twice in history, that a stock market of this size, without, having any, kind of wild political swings, has ever had anything like this, a move like this happen. I mean, this is unbelievable. So that you got to put this rally into scope. Obviously, they've thrown quantitative easing at it in size. The whole story. Obviously, the euro is weakened big time, and it helps, especially Germany, because they make obviously a lot of vehicles, lots of other exports. But the rally here is absolutely incredible. We've definitely dropped out the bottom. We made a new closing low. In fact, I would have to draw this a little bit higher if I drew it from a closing point of view. I think we maybe got a little bit lower to fall. I think a rally over the next 2 days or so is probably in my mind to be sold. So for me, this thing's turned down a little bit. I think we're going to have to come into support. I'd probably look at maybe Fibonacci level, 61% retracement of this breakout or something along those lines, or even of this move. I think there's still a hell of a lot of meat left on this bone is my point. So just watch here and be careful. If Greece is going to exit, there's a lot of uncertainty out there. There's a lot of there are a lot of unquestionable things unanswered things that we don't know how they're going to unfold, and I think the market doesn't know that either. And so as we move further into the week, if it starts to look a little bit more clear and we still don't have 100% of a plan, then I think that that could get really, really interesting. All right. Moving on, let's have a look at the local future. Look at the Aussie here, which up this morning a little bit, but I think Friday you can see the major red candle. coming in and testing. Watch here closely. I wouldn't be surprised to see a retest. I drew that line a little bit low there from the breakout, which I would peg it or call it 47,300. Yeah, right in there somewhere. So 47,300, somewhere along those lines. That's where I would throw that level out, and that could easily get reached. A day like today, a day tomorrow. I think we may have to come in, test support before we can actually make a move higher at this point. Right, let's have a look at Nedbank. I know we showed this one, I think, a couple days ago. Still felt really solid on Friday, especially with the size and scope of that sell-off. Still broken out of the bull plug, came down to test, definitely held on the close. We need to look for that thing to hold around 250. If it keeps holding at 250, then I think maybe this one can play catch-up as a laggard to some of the others. Okay, Anglos, which we showed a million times a while back as it had broken down, we kind of broke back above this resistance level here at about 184.50 and very quickly failing it again. This morning, I think that the Chinese rate cut news has obviously been taken bullishly by the commodity space. Didn't have a big move in Australia, but I'm not sure how much of that was following on the back of a weak session out of London on Friday and out of here. But we'll have to watch to see how this one plays out. If we hold below this level, then and especially if we can get back below the 180 number, I think that this thing becomes a short again. Right, CFR, just want to throw out, I was just having a look through the maps again this morning and notice, this thing has just become a brick wall here at 105. This is however many times this thing can fail at 105. It must be at least 10 or 12 by now. Once again, on Friday, we had a big reversal. The rand started to weaken, which is really what took this thing up off of its lows. But we had quite a nice reversal, actually, going at one point in the day. 105 failing again, so watch that. We just need to play that level accordingly in the near term. The last one I'm going to show is Aspen, which is, there's a couple ways we can look at this. If you look at it just here, some sort of bear flag that we're dropping out the bottom of. Either way, we've made a failure at 400 that looks somewhat convincing. And really, in the big picture, this thing looking very head and shoulderish, which is, I think there are a lot of people that are still on board this thing. And so you got to watch this one closely. If we drop, I don't know, I would peg the level around, call it 370, 371, somewhere around the 200-day moving average, then I think that we could really head lower on the back of a drop out of this head and shoulder pattern. So just be careful on this one. If we continue a little bit lower, especially if we get below that level, I think you got to get out and look to re-enter when it gets a little bit lower. That's it for today, guys. Good luck out there.